Good evening to all. This special lecture series program for undergraduate students is organized by Kolkata Bidhannagar Society for Academic Advancement on finance and its allied areas. Today's topic of discussion is material costing. Today we have Kakali Bhattacharya ma'am with us. She is Assistant Professor of Department of Commerce, Shree Agrasain College, Kolkata, India. Over to you, ma'am.
All those expenditure we incurred on or in respect of the production. Now, under element of production, we have majorly four elements: material, labor, expenses, and overhead. And element wise, accounting for all these elements is an essential requirement in order to fulfill the objective of the cost accounting, which is nothing but to control and manage the cost. In this lecture, we only focusing on the first part of these elements, which is material. And under this, we only look into how organization can collect, store, and issue this material and can try to control the cost related to this material. I would like to request the Azure Academic Service to please change the slide. Okay. See, what material means? Material is all those elements which we used to produce a product. For example, suppose a jute bag is made out of jute, a shoe made out of leather, or a cotton garment made out of cotton. So all this jute or leather or cotton is nothing but the material to those industries or to those organizations. Now, as per our cost accounting standard 6, we try to define material as or raw material as all those commodities or physical objects we use to make a final product is material. Again, they try to define material under two ways. One is direct material, another one is indirect material. They are suggesting that direct material are those material which can directly attribute or we can easily identify a product in under a product is the direct material, whereas indirect material are those materials which are not directly attributable or we cannot easily identify. For example, I have already told cotton garments is made out of cotton, so cotton is the raw material for the garment industry. Now, here the price of cotton or amount or the quantity of a cotton using we are using for a production of a particular product, we can easily identify. So, cotton is nothing but a direct material to that industry. Whereas, suppose company or organization is using other fabrics or each other suppose machinery and they are spending amount for the spare parts or lubricating well, it is very difficult for the organization to identify what amount of lubricating oil has been used in the machinery which is used to produce that a particular cotton product, right? So it is very difficult to identify. It is not, we cannot identify, we can identify, but that doesn't come under the material costing part. For that, we have a separate costing techniques, that is a overhead costing, which is not our today's discussion topic. So today we basically focus on the cost of the direct materials or the direct element of, yes, direct element of materials. I hope till you have get the clear idea about what material is and what is the direct and indirect material is. So I now like to request to please change the slide. Yes. Again, the the first, as I told you, the first and foremost objective of the cost accounting is to reduce the cost. And in the material, as far as the material handling is concerned, there is three stages there, and where the cost can arise and company can control or reduce cost related to materials in these three stages. What are those three stages? First is the purchasing stage, second is the storing stage, third is the issue stage. In these three stages, the cost of any material can arise and company can control this cost strategically. In every stage, there has a different accounting system, different documentalization system, and cost controlling system. Under this lecture or today's lecture, we basically focus on these three stages as under three sections, and we will identify the cost, calculation of cost, documentalizations, these stages is required, and the controlling procedure under these three stages. So we will start with the purchase. I will request to please change the slide. Okay. Please go to slide number 5. Okay. Yes. The first section of our today's discussion is the purchase of material. Now, what is the purchase? Purchase is, and particularly purchase of material, is nothing but procurement of material of right quality in right quantity at right time. So, cost accountant or purchase department need to focus into three steps: right quality, right quantity, and at the right time. In these three words are associated with the costing, because these three words can uh, impact on the costing procedures. Definitely the right quality, because raw material quality can only assure your quality of the product. Second is the right quantity, because you need to think about the storing, ordering, and purchasing procedure. Again, I will come under the costing procedure one by one. Again, quantity also important, and the time also very much important. We'll understand how time can impact on the costing procedure in the section 2. So I'd like to request, please change the slide. Yes, change the slide to 4, slide number 4. That's the purchase procedure I have discussed. Yes. Now, purchase department follow these procedures in order to purchase the raw material. What are those procedures? First is the receiving purchase requisition. Second, the ascertain the source of supply and selecting the suppliers. Third is the placing the formal purchase order. Fourth is going for the follow-up delivery. Fifth is the receiving and checking the materials. And sixth, last but not the least, checking the invoice and passing the same for the payment. I can I can make you understand by an example also. Suppose the cotton garment. Cotton is my raw material. So my first and foremost objective as a cost accountant will be, or purchase department manager will be, first I need to collect the requisition slip. How much raw material is required from the production department. As soon as I receive the raw material requisition slip, I will follow up the next part, which is the selection of the right supplier, which can who can supply me the right quality of the product at the right time and at right price, right? Then I will go for the formal purchasing, placing the formal purchasing order, and then I will follow up the delivery, how much time they will require for the delivery purpose. And then I will physically, as soon as I collect the raw material, I will go for the physical checking of those raw materials, and then I will collect the invoice, and I go for the payment procedure. So this is how the purchase can be done in any organization. Now I will go for how I can calculate, or how one cost accountant can calculate the cost related to this raw material. So I would like to request, please show the slide number 6. Yes. Yes, here I have mentioned how the cost of raw material can be calculated. See the pro forma. First, we need to consider the invoice price or list price. Then we need to deduct the trade discount, and then we have to less any return regarding to purchase. That means purchase return, and we need to add the delivery charges and the GST applicable to those delivery. Now, see, I have mentioned that cash discount should be ignored or should not consider. What is the meaning of these two discount, that is trade discount and cash discount? Basically, trade discount is associated with the purchase or selling purpose. For the selling purpose, seller provide a discount amount in the list price or on the basis of the list price or invoice price. That is the trade discount. But the cash discount associated with the collection of the cash amount from the debtor side. So we are particularly focusing on the calculation purpose or the calculation of the cost of raw materials. So we only need to consider the trade discount and not the cash discount. Okay. Okay, please change the slide to slide number 7. What documentations required for the purchasing procedure, or the purchase department should maintain what kind of documents? First is the purchase requisition, definitely from the production department. Purchase department should collect the purchase requisition in order to understand and identify how much raw material is required. So for first and foremost documentation would be the purchase requisition. Second is the bill of materials. Bill of materials nothing but the complete schedule of material and spare parts required to execute a particular work. See, not only the raw material required for the production purpose, definitely lubricating oil or any kind of spare parts or very small amount of any kind of material is required. So that need to be mentioned in the purchase requisition. Not, but the means only raw material cannot produce a product. There, the supporting materials also required. That should be mentioned by the bill of raw materials. Okay. And the last but not the least is the invoice. Definitely the collection of the collection from the creditors, from the suppliers, not the creditor. It should be debtor. Invoice we collect from the debtor side. Okay. Now I will discuss the procedure of calculation of cost by one mathematical example. So I would like to request to change slide to slide number 8. Yes. See, here I have attached a sum, by which we can easily understand the concept of calculation of the cost of raw material. See, what the question suggesting is that a particular organization required 1200 kgs of raw materials, and for which they are getting option to purchase in a lot size basis. If they purchase lot size of 1000 kg, then 22 per kg they need to pay. If that lot size range from 1000 to 1500, then it should be 20 per kg, and 1500 to 2000, that should be 18 kg. See, here we can understand the controlling or management of cost strategy. See, if the purchase manager go for 1000 kg lot size, then they have to pay 22 per kg. If they go for the second lot size, that means up to 15,000, 15 kg, 1500 kg, then they have to pay 20 rupees per kg. See that their requirement is 1200 kg, and the lot size is 1500 kg. So 22 rupees 20 should be less than, will be less than from the 22. So this lot size should be accepted by the organization. This is the strategy. Then we need to consider the trade discount, which is the 20% on the list price. That means on rupees 20 per kg. Second is the additional charges of the container. See, it is also very important concept. Sometimes student made the mistakes here. What is the meaning of this container? See, some of the products, some of the raw material required to delivery in the containers. So in this case, what supplier do? Supplier will charge the container fees additionally. So which is rupees 10 per container, and one container should contain 25 kg. So how much container we require? The calculation should be 1200 divided by 25 kg. That means 48 containers, rupees 10. I'll come into the solution part. See, this is how you need to identify how much container is required. Again, is in the F or in the D option, then credit allowed on the return on container means after the delivery of your product, the container returning back of the container additional amount you have to pay. So that amount should be added in your cost to identify the right amount of cost of your material. See, please go to the solution part, this 9, slide number 9. See the sum, solution of the sum. I request please change the slide to slide number 9. Is number 9. Yes. See the solution. Invoice price 1200 into 20 per kg. So 24,000 less the trade discount of 20%, which is 20% of 24,000, which is 4,800. Then add the charge of container. See the calculation. 1,200 divided by 25 into 10. So means the number of container is 48 into 10, 480. Then the GST of the containers 5% on 480, and the GST of raw material 10% on the invoice price minus the trade discount, the amount on which we have to pay the GST. Additionally, we need to add the freight charge, insurance amount, credit to the container. See, 8 rupees has been charged for the returning back of the container. That means 48 into 8, 384 is the credit for the container, and add the storage overhead, which is 5%. And after addition of all this amount, you can get the total cost of 1,200 kgs of raw material, which is 23,122. See, here I have mentioned total cost, not the cost of the purchase. Total cost, the formula of total cost is purchase cost plus ordering cost plus carrying cost. So purchase cost is basically invoice price minus trade discount. This cost is known as purchase cost. Purchase cost plus the ordering cost means the ordering cost, like the bill you have used, the way you order for the raw material, that via which you have applied that apply for that supply of raw materials, the cost associated with those process, those via or those medium, is the ordering cost. And the carrying cost is like freight, like the container charge, like the convenience fees, carriage out inward. This kind of cost is known as the carrying cost. So total cost, always remember, total cost equals to purchase cost plus ordering cost plus carrying cost. Now, madam, why we need to segregate this cost? Because in the section 2, when we'll go for the storing system of the material, we need to identify the level of the material, and where we need to identify the cost is required. Identification of the cost is required related to the storing calculation or the level of the material calculation. We require that. That is why we need to segregate the cost amount or bifurcating the cost amount to 3 parts, that is purchasing cost, carrying cost, and ordering cost. I hope this calculation of the raw material cost is clear to you. And if it is not, please pause the video and again look back. I hope you will get the clear understanding. So now we are moving to section 2, that means storage of raw materials. Yes, thank you. Storage of raw materials. Now, as soon as I purchase, definitely will not going for use of raw materials, right? At a time. So there must be a storing system. Hence, in this section, we are particularly going for what documentation required for the storing, process of the storing, and the function of storage section or the storage department with a mathematical solution. Okay, change the slide. Change the slide to slide number 12, 11. First, I wanted to discuss the, yes, discuss the documentation part. Yes, as soon as product reach to the go down, no, documentation. It's number 12, slide 12. Yes, as soon as the product reach to the go down, the function of the storekeeper or the godown keeper will be issue a bin card. Okay, what bin card, the function of bin card or the concept of bin card is that it is one kind of marker that signify particularly the self number, the on which the material is situated. It is particularly required for the physical verification or physical audit purpose that what material is situated in what self. Understand? For which we need to issue a bin card. So it is a very important documentation which maintained by the storage department or the godown keeper. Second is the store ledger. This is particularly uh, maintained by the cost accountant. It is basically one kind of ledger which include all the value, rate, and the balance of the goods. Okay, or the material. This is the store ledger. And third is the requisition list. That means the requisition slip we collected from the supervisor or any work manager or the production department. The requisition slip that should be mentioned because maintained because the storekeeper need to issue the raw material from the store to the production department. So they need to maintain a documentation. So these three documents are only maintained by the storing department or the storekeeper. Now we will okay. Now, as soon as there is a very interesting thing, as soon as storekeeper is issuing raw materials against a requisition slip to the production department, definitely the level of raw material will reduce in the self or in the godown. So again, we need to go for the ordering purpose to maintain our stock to avoid the abnormal stoppage or abnormal problem in the production process. Here, store department maintain some levels of product, level of raw materials, and that is why I request to go to slide 11. Here I have mentioned the different level of stock which identified by the storekeeper or the storage section. What are those level? See, I have mentioned reorder level, minimum level, maximum level, average stock level, safety stock level, and danger level. What is this level? Okay, first go first. Reorder level. What is the reorder level? By the name, you can easily understand. As soon as my stock get reduced in the go down, I should go for the second time order. So, go down keeper need to a clear understanding at what level I should go for second time ordering. Should I go if I go for ordering at a time when I have enough raw material in my storage, so it will be waste of money, right? Or it will be create additional cost to maintain all those additional raw materials which I have purchased. Again, if storekeeper go for purchase of raw material or placing order when stock level uh, or in the godown there is a stock for 1 day left, and supplier is saying 3 days he required to supply the raw material to your godown. So for the 2 days you need to stop your production. Again, it create a additional cost. So storekeeper very strategically or tactfully, I need to identify the reorder level. Here is a formula suggested by cost accounting standard. by which storekeeper can easily identify the level of reorder. What is the formula? The formula is maximum usage into maximum delivery period. Maximum usage means maximum amount of raw material used in a period of time. Suppose for one day, what is the maximum, how much kgs of raw material you need to issue to the production department maximum? That is the, or in a if you are go for the annual calculation basis, so annually what amount of what kgs of raw material you maximum use to deliver or to issue to the production department. That is your maximum use into maximum delivery period means what time maximum supplier takes to deliver your product. For example, 3 to 5 days means 5 days your maximum delivery period and 3 days your minimum delivery period. Okay, and delivery period also known as lead time. There is also another formula associated with the reorder level. See the formula, which is safety stock plus average consumption plus average lead time. I'll come to later because there is a concept of safety stock is not clear for you. I'll come into later. Okay, the second stock is the second level is the minimum level. What is the concept of minimum level? Concept of minimum level saying that what level you should maintain to justify your lead time or delivery period. Suppose my delivery period is 3 to 5 days. So my minimum level should be a amount of or a level of my raw material that should justify at least 3 days production. That is what the minimum level. What is the maximum level concept? Maximum level means maximum you can store a stock which can justify your production for the 5 days, as 5 days your maximum delivery period. Okay, or and another concept we can say maximum level also use this word in form of what is the what is the capacity of your storage of your godown. What is the maximum amount of raw materials your storage can consume? That is also another concept of maximum. Okay. What is the average stock level? Average stock level means the maximum level plus minimum level divided by 2. That means average level you need to mention or maintain or any kind of inconvenience. Okay. Now the safety stock. What is safety stock? Safety stock personally, particularly means a stock upper than the minimum level. Means you maintain your minimum lead time is 3 days, 3 to 5 days. I have told you if my maximum my delivery period is 3 to 5 days. So 3 days is my minimum lead time, and that is why I am for maximum I can maintain 3 days stock. But what happened that because of the transportation problem or a problem in the supplier side, supplier takes 4 days to deliver or 6 days to deliver your product. Means one day extra. Okay. So for one day, what you will do if you maintain a 3 days level minimum level? So what you will do for that one day? That means safety stock. That is what safety stock means. See, I have mentioned a stock maintained by organization to ignore the discrepancy in the buffering phase. The buffering phase means the problem or the change in the delivery period because of the inconvenience or any abnormal reason. That is what the safety stock is. And what is danger level or danger stock? Danger level indicate that if your stock reach to this level, you need to or you should be close your or shut down your production process. The level which the store fails to supply the normal requirement to the production department. That is a danger level, and this identification of this level is required to avoid the failure of the supplier of normal requirement to the production process. So this level is very important, and at least godown keeper should aware about this level. Okay. So these are the level, and see the formulas of the minimum level. Now you can understand the second formula of reorder level very easily. Safety stock plus average consumption. Average consumption means maximum uses plus minimum uses divided by 2 equals to your average consumption into average lead time, means maximum lead time, minimum lead time divided by 2. That is the average lead time. Okay. Now go for the formula of the minimum level. The formula is reorder level minus normal uses into normal delivery period. You can get very easily the minimum level. Maximum level formula is reorder level plus reorder quantity minus minimum uses into minimum delivery period. You can get the maximum level. Similarly, average stock level, minimum level, maximum level divided by 2. Safety stock is nothing but the any level of stock which is more than the minimum level. And the danger level formula is normal consumption into maximum lead time. This is how you need to calculate the different stock, different level. I have addressed a mathematical problem regarding this kind of storage. Yes, thank you. Now we will move to that question, to solving that question. Okay. Here the go through the question very minutely. This is a very tricky question actually. What this question suggesting? There are 3 raw materials, M, N, and Q. Okay. M, N, and Q require a different level, like 10 kg, 8 kg, and 6 kg. Okay. Reorder level also given. What is the reorder level? 15 kg, 10 kg, and reorder level of Q is not mentioned, and you have to identify the reorder level of Q. See the third, you are required to compute third point. See, you need to calculate the reorder level of Q. Okay, so you need not to calculate the reorder level of everything. You need to calculate the reorder level of only Q and maximum level of only N, because M and Q, the maximum level of M and Q already given, which is 2500 kg. Okay. And the minimum stock level of M. Okay. And see, the weekly production has given 300 to 500 units. So, and the average production is 400. See, 500 plus 300, 800 divided by 2, average production is 400, already given. So, we need to calculate very selectively minimum stock level of M, maximum stock level of N, and reorder level of Q. Change the slide to slide 14. Here I have attached the solution. Yes. So first I am calculating the reorder level of Q. Reorder level of Q, the formula is maximum uses into maximum delivery period. Maximum uses, in the question they have mentioned 300 to 500. So 500 is the maximum uses unit, and the maximum uses, the kg they have mentioned for 6 kg in case of Q, and 10 kg and 8 kg for M and N. So I am calculating for the Q. So I only consider the quantity of Q, which is 6 kg, and the cost is 10, as it is mentioned. Cost is 5. Sorry, maximum. Sorry, cost. I'm so sorry. It is a maximum delivery period, which is 5. So by calculating this sum, you can get the reorder level, which is 15 kg. Now we need to solve the minimum level of M. Formula of minimum level, reorder level minus normal use into normal delivery period. Mentioned reorder level has already mentioned in the question, which is 15 kg. Normal use also mentioned as average use, which is 400 unit, and the cost is 10 kg, and the minimum delivery period is 3 days. So by solving that, you can get the level of the minimum stock of the G production and the maximum level of N. Here you have everything is mentioned. What is the reorder level mentioned in the question? Reorder quantity also mentioned in the question. Minimum uses and minimum delivery period all are there in the question, and you can easily calculate the maximum level. This is how basically, it's a very lucid question. This is how basically you have to calculate the different level of raw material, a different level of raw material, and for which I am suggesting, please please memorize all these formula to calculate the different level of the materials. Okay, this kind of question generally asked in the question. So this is how you need to calculate the levels. I hope this much is clear to you, particularly regarding the calculation of the cost of materials and the calculation of different level of uh, materials. Okay, now we will move forward to section 3, which is the issue of materials. Yes, so I have understand how I need to purchase raw material, and how I need to calculate the purchase cost. Then I understand how to store those materials, and how to control those materials, and the level of materials. Now now I issue I need to issue my raw materials to the production department. That is what my objective is, to produce the product, and for which I need to issue from the store to production department. Again, for the issue of material, there are different strategy is there. What are those strategy? I have mentioned, see, FIFO, LIFO, simple average, weighted average, specific identification, base stock, periodic simple average, periodic weighted average, standard price, and replacement cost. This every strategy can used by the go down keeper or the store manager. Particularly in this deliberation, I will focus on the LIFO and FIFO. And if in any this kind of strategy or method I need to apply, or we need to apply, because the cost of materials gets changed in the market day by day. Market price change. So if company issue a product which they purchase are very low, and they are not issuing that product to the production department, and they are issuing product which they purchase cheaply. Okay, but it can be happen the product you purchased very recently is costlier than the product you purchased are very low, right? And the quality of those raw materials also get reduced or ruined. So that is why a good management system required in case of issue of material. Understand? Because if I'm not managing my store very impactfully or strategically or tactfully, I can create another cost for my materials or handling of materials. Understand? That is why we need to more focus about the issue of material, purpose of this method or strategy to issue the material to the production department. So first strategy is the FIFO. The full form is first in, first out. Means the material you acquire first should issue first in order to avoid the change of price. Understand? Because as price will change, your product cost of the product or the price of your final finished good will change. Understand? It can be happen that you are using very cheap amount of material, and you are issuing that product or the finished product in a higher cost. So it is a profitable situation for you. So that is what the FIFO method is. Second is the LIFO, last in, first out. It can be happen that is in very past the cost was very high, and recently the cost get reduced. That is why you issuing the product which you received recently, then the product which you received very long. That is what the last in, first out. Which come recently go first, and which come very early go late. This is simple average. Simple average basically the average of the this LIFO and FIFO basis. Weightage average also we apply weight for every stage, and the remaining stages are there. I will definitely discuss one by one if I can get another opportunity or anything. Particularly, I personally particularly follow these two states, that is FIFO and LIFO, in today's discussion. So I have attached one question in for 17. Yes, one question, and in on the basis of the one question, I will apply on the question. I will apply both FIFO basis and LIFO basis, and I will make you understand what is the difference between this FIFO basis and LIFO basis in case of calculation of the, or in case of issue of the material to the production department. What differentiation arise if I apply FIFO basis on the issue method or LIFO basis in the issue method? First, we will apply FIFO. Go to slide number 18. Yes, slide number 18. Yes, thank you. See, the format should be date, and another three columns should be received, issued, and balance. Receive mean the purchase, what you acquired. Issue mean what you issue to the production department, and balance means what left with your go down. Okay. See, on the 17th March, first was opening stock. In the question paper, you can see opening stock was 3,000 quantity, 3,000 kg of 20 per kg, right? So my opening balance was 3,000 kgs of raw material per rate of which is rupees 20. Okay, so amount should be 60,000. Now on the 2nd March, godown keeper purchased 2,000 quantity or kgs of raw material at the rate of 22. Okay, so the total amounts to 44,000. Okay, now that will get added with the balance. So I have added that with the balance. See, now my go down capacity become 500 kgs, 300 plus 200, 500, and which amounts to two types of amounts to rate of two types of material, which is one is 20, one is 22. In the 3rd of March, the issuance requirement arise, and I need to issue, or storekeeper need to issue 1,500 kgs of material. Now question arise, this 1,500 kgs of material should arise from which stock? From my opening stock, or what I have purchased in the 2nd March. As I am applying FIFO basis, means first in first out. So I should issue this requirement of 1,500 from the opening stock, which is rupees 20 per kg. And see, in the market, the same product, the same raw material available in 22. So you are saving rupees 2 per kg by issuing this from the FIFO basis or from the opening stock. So the opening stock left with me is remaining 1,500 of 22. See, in the balance side, I have mentioned rupees 20 kg, and the purchase I have done in the 2nd March for 22 kg. That is what my current go down situation is, balance is. Okay. Then the day of 5th March came. In that day, go down keeper again purchase 2,000 kg of 23 per kg. Okay, see, market price is going to increase, or trend to increase. Okay, and you are applying FIFO basis, so you are getting benefit of issuing materials of very low cost. See, on the 10, again 1,500 kgs requirement of issuance is arise, and that also arise from the opening stock. That should be issued from the opening stock. So opening stock get nil, and what left with my storage is that 22 and 23, rate of 22 and 23, 2,000 and 2,000. Again 15 March, on the 15th March, issuance of 2,200 and at a cost of 22. So left, what balance left is 2,000 kg of 23. Okay. On the 20th March, see, again purchase has happened of 20,000 kgs of sorry, it should not be 20,000, it should be 2,000 into 24 per kg, and that should be get added with my balance. And on 31st, again 15,000 issued. Sorry, 15,000, 1,500 issued. So left balance is 5,000 from the purchase what has done in March 5th, and remaining 2,000 which I recently purchased on 20th March. That is my balance, closing stock balance. Understand? So what is the stock I left? See, the cost of the stock I left in my godown is 48,000 and 11,500. Okay, so it is nothing but 59,500 amount. What I left in my stock is 59,500. Remember that. Now we will move forward to LIFO basis, and we will look into what amount of cost is left in my godown. Okay, then you will understand easily what is the difference between LIFO and FIFO. Okay, please go to page number 19. Okay, thank you. Here also see same solution. Same solution. My opening stock was 300, 3,000, and I have purchased in the 2nd March 2,000. Okay. At the day 3rd March came, when I need to issue 1,500 kgs of materials, I need to issue from the purchase which I have done on the 2nd March. Cost of 22. Okay. So that is what done. Okay. Is but just the problem of the typing, it should be 22. The left, but the balance side is rightly mentioned. See, balance remain with me is the 500 of 22. Okay, balance side is correctly mentioned, but the issue side it should be 22. Okay, that is not an issue. That's not an issue. That will not change my calculation because balance side is rightly mentioned. See, balance side 3,000 left from the opening balance of rupees 20, and 500 from my current purchase which I have done in the 2nd March, 500 of 22. So balance side mentioned very correctly. Okay. Then the day of 5th March came. Again purchase happened. I added in the balance side. Again 10th March came. Issuance required. In that case, I issue what I purchased in the 5th, not in the 2nd. 23 at the rate of 23. Okay. And the balance is remain with the stock. Again 15. Issue came 500. I issue what I purchased in the 5th March. Then 500 I issued from what I purchased from the 2nd March, and left the remaining 1,000 I issue from the opening stock balance of rupees 20 per kg. Understand? And what stock left with me is nothing but the opening stock. Okay. Again, in the day of the 20th March, is when the purchase has happened of 24 per kg, and on the 31st March, again 1,500 has been issued of 24 kg. So what left with my store is that 2,000 of rupees 20 per kg, which is nothing but the balance of my opening stock, and 500 from the very recent purchase which has done in the 20th March, and the amount is 500 into 24, nothing but 12,000. So total it, or the added it, the 40,000 and 12,000, which is nothing but 52,000. So in the LIFO basis, I left with my stock is 52,000, but in the FIFO basis, I left in the stock is 59,500. See the difference? It is always preferred to issue the LIFO because you can you can issue your stock what is you acquire recently and at recent cost, and you can offer your finished product to the market also at very recent cost. That is why it is always preferable to issue to apply the LIFO basis. But some of the organization, to get benefit on the issuance price, they prefer LIFO also, FIFO also. But there are different another strategies like specific identifications, periodic sample average, periodic weighted average. Those are also very useful tools or useful strategy or method to apply the issuance of materials. Okay, I suggest to follow a very good books for the more solutions of this kind of sums or the topics. Okay, then we are moving to the section 4. I hope this calculation of LIFO and FIFO is very much clear to you. And now we are moving to section into section 4, that is the technique of the material control. So we have already calculated the purchase cost, we have already calculated the storage cost, and we have already calculated the cost of the issuance. Now we need to control the material, particularly how we need to store or how we need to issue. Here the control comes into effect because at the time of purchase there is nothing to control. There is only the selection of the right quality of materials at the right quantity and at right time. But in case of storage and issuance stage, you had the material with you, and you need to control your material very tactfully. Okay, there are some techniques is there which is suggested by the cost accounting standards. Particularly there are three techniques of material control. Change the slide to 21. Okay, there are three material techniques of material control. 21, slide number 21. Yes, there are three techniques of material control: ABC analysis, economic order quantity, and JIT, just in time. I'll discuss one by one, but first is the ABC analysis. Don't get confused with activity-based costing. Activity-based costing and ABC analysis is completely different. Student get mistake by these two terms, ABC analysis and activity-based costing. Okay, activity-based costing is associated with the overhead calculation, not in the material costing. Material costing, particularly the ABC analysis. What is the ABC analysis means? ABC analysis is one of the selective control technique where all the materials are classified into three categories. Okay, A, B, and C on the basis of the annual issue value in terms of the money. For example, a car manufacturing company, and they use more than 300 items in the production process, including the engine or the gearbox or tire or the fuel injecting system or rubber packaging, anything. There are 300 items they are applying in their production process. Okay, now it is very much difficult or it is very much costly for the company to store every kind of material, every kind of 300 material in the storage. Okay, so what company particularly, and again, see the cost of engine or the cost of gearbox definitely will be high than the injecting system of the fuel or the rubber packaging, right? So it will be very costly if company go for store the high value materials. Okay, so in that case, company particularly focus on the ABC analysis, and they segregate their material into three categories: A, B, and C. And what is the category? What is the objective, or what is the strategy they apply to categorize their raw material into these three states? That is A, B, and C. For the category A, what they do is that they particularly categorize those materials into category A, which are highly valued and used 60 or 70% in your production process. Okay, and this kind of material, so you can easily understand. So the material which is required in the most proportion in my production process and which is highly valued, this kind of material require additional focus or the additional management, high valued management. And management suggests that this kind of material should be stored less. Very less amount of material I should store because it is highly cost. Okay, it can generate a high amount of cost or extra burden. And again, see, if the company cannot properly use this kind of material with time, what will happen? the money get blocked with this kind of material into store. Okay, then it will create again the opportunity cost. We know what is the opportunity cost in the account, in the costing. So to avoid the opportunity cost, what management suggests is that category A product or highly valued product should be storeless. Okay, then come to category B. What category B suggests? Category B is like moderate. Okay, they particularly matlab the product the store the product or material is required in the production process highly 20 to 30%, and which is very moderate kind of management is required, and it also suggested by the management to store a very minimum level, not the very less or very few, but in a minimum level. Okay, and category C is applied for those material which is lower in value and very less amount is required for the production process. And company suggests purchase it in a bulk, in a high volume, so that we can get the cost benefit. Understand? So this is how they categorize their raw material on the basis of their value of money. They categorize them into A, B, and C, and in this way they handle or they control their materials in the ABC analysis system. I hope ABC analysis system is very much clear to you. Then we will go for JIT, just in time. I'm coming to the in the economic order quantity later. So what is just in time suggest? By the name you can easily understand. Just in time means as and when required. Understand? This concept tries to suggest that it's try to reduce the cost of the material control by purchasing the minimum level of stock to avoid the safety stock. Particularly, they look for the purchase as the requirement arises, as and when the requirement arises. They never focus on the minimum level or the safety stock level or the danger level. Where as and when my requirement arise, or the maximum minimum reorder level, any kind of level, they are not looking for the level of storage, which we have already discussed sometime early, right? So they don't look for the level of the material. They only focus on what is the requirement, what quantity of material is requirement, and they just go to the market and they purchase it. That is for just in time. This strategy, why it is important? It is important because it is very cost effective. You need not to blockage your money or block your money in the store for a period of time. Okay, and you can use your money in any other in other kind of function. So it can be one type of reduction of the opportunity cost can be happen. But the disadvantage of this kind of system is that company is taking a very risky situation, or company can face a very risky situation if the material is not available in the market. That is what the problem associated with the just-in-time system. Okay. And now the economic order quantity. This is the most important material cost control system, and most of the company follow this system. This economic order quantity. Economic order quantity. Economy. The word economy means which is very feasible or very effective, right? So you are ordering in a quantity in a lot size which is very much economic in nature. And economic in what sense? Economic in the sense of purchase cost. A purchase cost which can equate your carrying cost and ordering cost. It's nothing but the economic order quantity. Means under economic order quantity, carrying cost and ordering cost get equal. And it provides the economic benefit to the organization. Change the slide to slide number 22. Yes. This is a formula of calculating EOQ. What is the formula? Root under 2AO divided by C. What is the A, O, and C stand for? A stand for the annual consumption, O stand for ordering cost, and C stand for carrying cost. I have attached a sum also. See the calculation. Change the slide to 23. Yes. See the calculation. The quarterly consumption is 2000 kg. The cost per order is 50 and cost per unit is 40. Cost per unit means nothing but the cost per unit of carrying cost per unit actually. Ordering cost per unit is 50 and carrying cost per unit is 40. And the storage cost also, sorry, I'm so sorry. Cost of order means ordering cost is 50, cost per unit means the purchase cost of the 2000 kg, and the storage cost is 8% 8% of the 8% per annum. That is what the question is, and I need to just put the amount into the formula, which is root under 2 AO divided by C. 2 into annual consumption is my 20,000 kg into 4, because it is the consumption of the quarter, right? And in a year there are 4 quarters. So 2000 kg into 4. This is how you can get the 8,000 kg of annual consumption. Then into 50 per ordering cost divided by 8% of the ordering cost, 8% of the per unit cost. So 3.2. So in this how you can calculate the 500 kgs as the economic order quantity or EOQ, in which the cost of purchase equal to the storage and carrying cost. So this is how you can calculate the economic order quantity, the EOQ. I would request to please go to the page number 11, level of stock. Yes, this economic order quantity can apply in this maximum level calculation, where the requirement of reorder quantity is required. Reorder level plus reorder quantity. In this reorder quantity, we can use the quantity of the EOQ. This is how EOQ amount is applicable in the level of stock calculation. Understand? I hope the calculation of the purchase, level of stock, issuance and EOQ get clear with the concept of the different material controlling strategy. So this chapter is very vast. I try to summarize this chapter in this 1 hour, and I try to make you understand. I hope it will take time, but I hope by the time you will get understand that concept and topic. I wish you all the best for your future. And with this, I am concluding. And again, I thank to Azure Academic Service for providing me the opportunity and for the nice coordination. And I also thankful to the Kolkata Bidhannagar Society for Academic Advancement and the Honorable Secretary of the Kolkata Bidhannagar Society of Academic Advancement for giving me this opportunity. So over to you, Samim.
Thank you so much, ma'am, for your lucid explanation on material costing. So this is the basic concept of material costing, and this chapter is very vast, and some tricky questions are there that needs to be covered. And this session will surely help students to understand the basic concept, right? So thank
Yes,
you so much, ma'am,
absolutely. Yes, thank you.
for your valuable time for students out of your busy schedule. Thank you so much, ma'am. So with this, we are concluding this session.